From our world headquarters in New York, Bloomberg Surveillance this hour brought to you by Kundert Volvo. No introduction necessary. Wall Street Week Hall of Fame member Laszlo Birinyi. Laszlo, good morning.
Good morning.
I'm looking at the quote at the top of your note here. Successful investing is anticipating the anticipations of others. What are we anticipating as we look at the market anticipating right now?
I think the market is suggesting that the economy has turned the corner and is probably going to do a lot better than most people anticipate. I think that it's been a surprise since March, and if you believe that the market is a discounting mechanism, it's saying there's some good news ahead.
Do you have the same enthusiasm now that you did, say, April 1st, or has the easy money been made? I'm still very optimistic. I think that what you're seeing here is an awful lot of breadth in the market. In fact, you have a stronger advanced decline line off the July 15th rally than you did at the early ones, which tells me that people are being a lot less discriminating. They're buying everything because they're probably not in the market. They've probably missed the train, if you will. And it troubles me a little bit, but again, it just tells me that people have not really bought into this rally.
Laszlo, commodities producers in the S&P 500 are selling for about 33 times this year's earnings. Based on next year's earnings, it works out to about 18 times, according to a story we're running this morning. So hedge funds are starting to snap them up. Is that the right thing to do? Are commodities the place to be?
They've had an awful big move, and I think that that's a very fundamental question. We have been fairly active in a few of the names, but I find it hard to take a stance on a stock like Freeport, which has gone from 47 to the mid-60s in a matter of a few weeks. So I'd be a little more cautious there, at least from my viewpoint.
So what do you like that hasn't been bid up already?
Well, there's very few things that haven't participated. We continue to go with strength. Stocks like Google and Apple, some of the healthcare stocks, only because that's where a lot of the money is going. There are some retailers that are a little bit interested. It's just basically we're going stock picking across the board, but it's very difficult because everything is moving, and you're trying to pick the prettiest flower in the greenhouse when all the flowers are blossoming.
You said healthcare stocks. Does that mean, how are you betting on healthcare reform?
Well, more in the HMO types, so something like an Aetna or a WellPoint, as opposed to the classical pharmaceutical companies, which have done well. But again, I think that we seem to see more interest in the names I mentioned rather than the Pfizers and the Lillos.
If you're just joining us on radio this morning, folks, as we're on television as well, Laszlo Birinyi with us for years on money flow and block trades. Laszlo, you began at Salomon Brothers a few years ago, like 1976. I hate to bring that up, but you got a great pearl of wisdom here, which is, quote, analysts, strategists, and commentators, Ken, that would be you and me, should focus on the environment and background and not the specifics when forecasting. Tell us about that environment and background now. What is the Birinyi background?
Well, you're talking about Birinyi's market rule number 3. And I think that what we try to do is, as you go back, and people say, well, what's going to be the catalyst? Well, the catalyst is going to be this, or the catalyst is going to be that. That's not important. What's really critical is, do you have a circumstance where if some good news comes along, the market will rally? And it's interesting that the market really took off in March when Citibank said that they were making money. That was the first positive development. Now, in February, if we were looking for a catalyst, we could have never sort of forecast that the chairman of Citibank would come out. And so the point is that you want to look at what's the sentiment like, what are the circumstances like, what is the cash position like, what's the technical state of the market. And if all these things are in positive circumstances, the market's going to rally. And what the match will be that will light that fire is what most people try to focus on. They try to predict the development that will get things moving. We try to, again, understand where we are and the background, knowing that it'll happen.
Well, within your work at Bloomberg decades ago and setting up some of the original functions on the Bloomberg, I think of money flow. Let's talk cash flow now in that abundant cash on the sideline. Have you ever seen this much cash on the sideline?
Well, remember, too, it's a function of rates. There's a lot of cash because the alternatives are not very acceptable. And I don't worry too much about cash on the sidelines because money's fungible. So you get a market that's going, and the money will come out of the mattresses and the side pockets and whatever. But, yes, you're right. I've never seen this kind of money because, again, what else are you going to do?
That's really important, Ken, and I know you've got all your cash on the side pockets of the Maserati.
Oh, exactly.
And so, Laszlo says get it out of the side pockets of your car.
Well, Laszlo, where do you stand on the economy? We had some optimistic comments over the weekend from Fed Chairman Ben Bernanke. We have kind of a pessimistic viewpoint in the Financial Times today from Nouriel Roubini of NYU. They can't both be right.
Well, Mr. Rubini has had the same stance for quite some time. And I think that's one of the dangers of forecasting is when you're right for a long time, you sometimes get a little less than precise in your work. The market's view seems to be the economy is in much better shape than we think it is. When I see stocks like U.S. Steel and Triple M and some of these other what we call deep cyclicals doing what they're doing, it tells me that the market's telling you that somebody's got it wrong.
So you're a V-shaper then? The economy bounces right back?
I think the economy, again, yeah, if I had to do that, that's where I would cast my vote.
Laszlo Birinyi. We'll have more coming up in a few minutes.
We will. Folks, this hour of Bloomberg Surveillance, we're brought to you by Town Motors Audi. We're also brought to you by Laszlo Birinyi, his perspective, his optimism on the markets. You say here, Laszlo, just plain and simple, mutual funds have hit the ball out of the park recently. Really 400 basis points, I believe it is, over the S&P 500. Why have mutual funds done so well recently?
I think a lot of the favored stocks have done very well. Stocks that people like an Apple has had a fantastic year. Goldman has had a great year. So that's where a lot of funds held those stocks last year and held on to them, and I think that's part of it. And I think they were a little more optimistic at the market bottom, in part because many of them are sort of required to stay in the market, so they caught the bottom whether they wanted to or not.
When you go into work every day, how do you frame the phrase "get back to 14,000"? Is that 3 years, 5 years? Is there a Birinyi perspective on when we get back to what we knew?
No, my view on forecasting targets has always been one step at a time. Right now, we think the market has the wherewithal to get to about 1080 on the S&P. How we get there is critical, and I think the exercise of putting time and price together is a very difficult one. The market doesn't run in 12-month cycles, and this market has already broken all kinds of parameters and historical metrics, and I think the ones that we used in the past are probably less useful than they are today.
Laszlo, what's your position on bank stocks?
We like some of the bank stocks. My tendency is toward the larger, more liquid ones, the ones that are more, where there's more information available, Wells Fargo and JP Morgan specifically. The smaller banks are on a case-by-case basis. And in this whole market, I would be much more focused on stock picking than trying to get groups and fundamental overviews.
And what about Citi, which has done a double this year, but as far as year-to-date goes, it's still down considerably.
Well, we took Citi off of our recommended list, I think, about 44 a couple of years ago, and we see no reason to make any alteration in that attitude.
Wait, a couple of years ago, so it just keeps getting cheaper and cheaper and cheaper.
No, the price keeps going down. That's how we look at it.
Laszlo, when you do your securities analysis and the flows, there is this juggernaut General Electric, which has been very painful when you divide it into industrial and the financial side as well. First, your opinion on General Electric, and which are you more focused on in your analysis, their industrial sector or their troubled GECC?
I tend not to look too much at the company. We try to buy stocks, and quite frankly, we've been buying General Electric. I think that if you're going to have any kind of recovery, the stock is going to participate. And I think a lot of people have bad memories and therefore staying away from it. We've been pricey on our accumulation, but General Electric, I think, is not a stock that especially troubles me, especially if you have a time horizon of more than, say, a month or 3 months.
Laszlo Birinyi, thank you so much. Good week of trading, and thank you for putting that Bloomberg behind you.